Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and this is your quick look at the stories we've been covering that you need to hear about. The gold price spent time around the $18.45 per ounce mark this week, supported by concerns about inflation, which were buoyed by the release of Consumer Price Index data. The index, which tracks a basket of goods as well as energy and housing costs, rose 4.2% year-on-year in April, its fastest pace in 12 years. The yellow metal pulled back later in the week, but experts remain optimistic about its future prospects. I recently had the chance to speak with Ed Moy of Bolorum, who believes gold should reach the 2,000 to 2,100 level by the end of the year. His perspective is that when premiums are taken into account, buyers are already paying that much for gold. Ed is also a former director at the U.S. Mint, and the conversation is definitely worth a listen. I also want to take a moment to touch on copper, which has been in the spotlight for the last couple of weeks as it surges to new all-time highs. The red metal's latest major move came this week when it topped $4.90 per pound for the first time ever. Copper is a key metal in construction, and its rise has been linked to higher Chinese demand and supply-side concerns. However, copper is increasingly becoming known for its green energy properties. Among other things, it's used in electric vehicles, electric vehicle charging infrastructure, and energy storage applications. With copper's rising price in mind, we asked our Twitter followers this week if they think this level is sustainable. The poll was ongoing at the time of this recording, but most respondents said they think that it is. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. Staying with the green energy theme, we're going to end this week on battery metals. INN had the chance to speak with Chris Berry of House Mountain Partners, who talked about what makes the current rise in lithium and cobalt prices different than the increase seen in 2017 and 2018. Chris explained that some of the trends seen a few years ago are getting stronger. For example, batteries keep getting cheaper. Meanwhile, COVID-19 has pushed clean energy conversations globally, and we're starting to see more of a focus on supply chain independence from China. With prospects looking bright, how can investors pick winners in the battery metals space? Chris recommended looking at companies with partnerships and projects at the low end of the cost curve. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. See you next time.